Thank you very much and good morning. I'm very pleased to be here today to talk about Lucara. This will be a bit of a switch in gears for most of you in the audience. I think it's a great time to be looking at the diamond space. We've come through a very difficult period with weak prices. We started to see a good recovery at the end of 2019. That may be delayed somewhat by the coronavirus, which is upon us, but we feel very strong about the long-term fundamentals of supply and demand. The reality is that diamond deposits are getting rarer, and there have been no major discoveries that really can fill the supply gap that we are forecasting. I will be making some forward-looking statements and encourage you to review our cautionary statement on our website. Lucara's flagship asset is a very high-margin diamond mine, which is located in north-central Botswana. We've been in production at Karowe since 2012, and we've become renowned for our production of very large, high-quality diamonds in excess of 10.8 carats in size. To date, we've spent about $200 million on our operations, generating 2.64 million carats and $1.5 billion in revenue. Between 2014 and 2019, we've also paid out $271 million in dividends, and we are the only diamond mine in world history to have produced 2 diamonds in excess of 1,000 carats in size. A lot of Lucara's success is owing to the fact that we are a diamond mining company that has really worked to embrace new technologies and innovation in our mine design and overall approach. That has been important because it's allowed us to recover some of these large, top-quality diamonds undamaged. And what you're looking at here is 2 of our historic diamond recoveries. On the left, the Lacetti Llorona, which weighed in at 1,109 carats, and on the right, the Constellation, 813 carats, and it sold for the highest price ever achieved for a rough diamond, $63.1 million. In 2019, both of those diamonds were polished, and they each yielded primary center stones of greater than 300 carats each. These were D-color, flawless stones, some of the highest quality stones ever certified by the Gemological Institute of America, and the one you're looking at there is from the Lacetti Llorona itself, the largest emerald-cut diamond of its kind in the world. Looking at some highlights from 2019, Karowe had its best operating year ever in the 8-year history of the company. Our continued focus on operational excellence meant that we were able to drive down costs and increase productivity. We are also able to do that safely. We achieved 2 years without a lost time injury at our mine, and we were a first-place winner in the Botswana Chamber of Mines Intermines First Aid Competition. We generated revenues of $192.5 million, and our operating costs were under $32 a ton. In addition, in April of last year, we recovered our second plus 1,000 carat diamond, which I'll talk about more in a moment. And really, just as a reminder, we generate a lot of value from these big stones, and last year alone, we had 3 stones in excess of 100 carats, which collectively sold for more than $17 million. The other big development in 2019 was the completion of a bankable feasibility study examining the potential for expanding our mine underground. Very encouraging results, and we're now working full tilt to execute on that plan, which I will also talk about a little bit later in the presentation. Our second diamond business, Clara, which is a web-based digital sales platform, also ramped up nicely in 2019. This is an attempt to completely transform the current diamond supply chain, and we did manage to double the number of sales and the total value transacted in the latter part of the year. We're now at a point where demand on Clara has outstripped supply. We're now bringing on other miners, other third-party suppliers of diamonds to take that platform to the next level. As far as our balance sheet is concerned, we're in a very strong position. We paid out $22.4 million in dividends in 2019. We did make a decision in the 4th quarter to suspend that dividend in favor of investing that cash in our underground program. All told, we ended the year cash positive. We had no long-term debt, and our $50 million credit revolver remains undrawn. Subsequent to year-end, we did announce a groundbreaking collaboration between Lucara and the world's largest luxury brand, Louis Vuitton, to plan, polish, and sell a collection of exclusive diamonds and diamond jewelry from Sewello, the second plus 1,000 carat diamond that we recovered last year. And what's interesting about this diamond is you'll notice it doesn't look like the other diamonds that we showed you before. It is the largest diamond to come out of Botswana, the second largest diamond in world history, but it is covered in a coating of black diamond. It's very difficult to see within this stone. It's a bit of a mystery. Louis Vuitton is excited about taking this diamond on the road. We're going to take it on a world tour and talk about how natural diamonds form. And then the plan is to start polishing windows and actually turn this diamond into an exclusive LV collection. And important for Lucara is that 5% of all the retail sales that come from this diamond will be invested back into our sustainability programs in the country of Botswana. Another late-breaking development, some exciting news. 2 weeks ago, we recovered our latest exceptional diamond, 549 carats, and potentially the nicest stone we've actually ever recovered at Karowe. This comes out of a geological unit we call EMPKS. You'll hear me talk about this a little bit more later. But this geological unit has yielded all of our highest value diamonds. And what's important is that this unit becomes more relevant as we mine deeper. It starts to dominate the ore deposit as we mine deeper, and it's a very important value driver in our economic study on the underground. It's also important to note that the revenue that would come from a stone like this has not been included in any of our outlook or forecast for 2020. So just to reiterate the importance of these large diamonds on our production profile, 70% of our revenues come from these large high-value diamonds. And that has basically been consistently achieved since mining began in 2012. And what you're looking at here is the cumulative recovery of big stones over the course of any 1 year in the history of the mine. And you can see that in 2019, it was actually one of our best years for the recovering of large diamonds greater than 10.8 carats. And that is, again, because as we mine deeper, the ore body is actually becoming richer. Okay, so that translates into a high average value in terms of diamond price. You can see that the world average right now is sitting kind of below $100 a carat. We're 4 times higher at $468 a carat, and that really helps Lucara to be resilient as we weather these kind of volatile times. And speaking of volatile times, as I mentioned at the outset, we have had a challenging couple of years in this business. We had interruptions in the middle part of the pipeline. We had demonetization in India, which really impacted our manufacturers. We had the trade war between the US and China. All of these were factors in diamond price weakness in 2019. But the supply chain did clear out, and our fourth quarter sale in 2019 was actually quite a strong sale for Lucara. We don't know where things will go with this coronavirus. There's no doubt that it will have some sort of an impact, but we do believe whatever impact it does have, it will be temporary, and that longer term, these prices will strengthen. And again, no new mines looming on the horizon, and Lucara in a really great position to kind of weather these tumultuous times. Looking at some financial and operational highlights for the year, I won't spend a lot of time on that, but just to point out, again, revenues up year over year, costs down year over year, EBITDA up year over year, and we're consistently, again, maintaining that 60% margin. Our outlook for 2020, broadly similar to what we have seen for 2019, a little bit higher on the revenue side, again, reflecting the fact that as we mine deeper, we're getting into higher value ore. And now I'd like to turn and talk about growth. We've got 2 main growth projects within the company. The Karowe Underground, as I mentioned, is the first one. This has the potential to double our mine life from our initial 2010 feasibility study. We would be mining here out until at least 2040. We're looking at a capex of about $500 million, but a payback of under 3 years. It's going to add $4 billion of additional net revenues, and it will generate over $1 billion in additional cash flow. I want to point out that the almost $200 million in revenue from exceptional diamonds, the diamonds you saw at the beginning, the Lacetti, the Constellation, our latest 549 carater, none of those revenues are included in our economic models. We know those diamonds are there. It's very difficult to predict when exactly we're going to get them. So our economic study does not include them. Rather, the way to think about it is that we've got the potential for another $500 million of additional revenue that will come from those diamonds. We know they're there. We're just not sure exactly when they'll come through the mill. So just a little bit about the underground mine design. Because the ore body's really richest at depth, we've made a decision to basically get right to the bottom of the ore body. We're using long hole shrinkage to systematically drill and blast the entire south lobe ore body on a vertical retreat basis. And if we look at this slide, it just shows you a very simple diagram of how that will work. And importantly, all of our development is in competent granitic host rocks, and because we're coming to the richest part of the ore body first, we will pay back all that capital in under 3 years. Our plans for 2020 are to move aggressively into early works, and we're going to be starting our shaft sinking as well. We are spending $53 million this year on that early works program, which is less than 10% of the total capital required, and we can fund it all out of cash flow. In 2021, we will be spending in excess of $100 million, and we are in the process now of reviewing our financing options. And we've got lots of interest in this opportunity from both the banks, and we're also looking at high yield debt. And towards the latter part of the year, we'll be back with some details around how we plan to move that forward. And finally, in terms of growth, I'm going to talk again about Clara. And as I mentioned, Clara is a secure web-based digital sales platform which is looking to completely transform the existing supply chain, driving efficiencies and unlocking value. And this is the first and only sales platform of its kind in the world. And for the first time, our customers will be able to buy diamonds stone by stone rather than being forced to buy entire buckets or batches of diamonds, which has been the tradition for the last 100 years. We've been doing this now for the greater part of a year. We've grown our customer base from 4 to 32, and we're now on our 20th sale. And we're now at the point where the diamond supply that we're providing from Karowe is not enough. The demand has exceeded that, and starting this week, we are selling third-party supply through that platform. We've got 2 major trials ongoing with other producers. So stay tuned on Clara. We actually think that Clara could be a big beneficiary, actually, of what's happening with coronavirus, because no one has to get on a plane to go buy diamonds. They can do it from their office. This will allow them to keep their polishing factories full. And we are cautiously optimistic that this is going to be a big impetus for this platform in 2019, or 20 rather. And finally, just a comment about sustainability. This is obviously a very key focus area for investors today, and this is something that Lucara takes very seriously. We have a strong sustainability team focused in Botswana. It's been in place for the last 10 years. Our report is prepared in accordance with GRI standards. We are a UN Global Compact participant, and we contribute to 10 of the 17 UN SDGs. You can see them listed on the screen below. We're also certified by the Responsible Jewelry Council, compliant with Kimberley, and we are also members of the Diamond Producers Association. As I mentioned when I talked about our Louis Vuitton deal, 5% of the proceeds from that retail jewelry collection will flow back into our community programs. We have invested in an abattoir. We have invested in a community farm, which was initially designed to address malnutrition, but has been so successful that we're now selling excess produce and eggs into the local supermarket chain, and it's become a business development opportunity for that community. Our latest initiative is a sports facility and a school, which we broke ground on about 2 weeks ago. Okay, so just to conclude, Lucara is a premier, mid-tier investable diamond company, which we believe is very well positioned for long-term sustainable growth. We weather the difficult diamond market because we are a high-margin producer. We're in a great low-risk jurisdiction, Botswana, which we refer to as the Switzerland of Africa. We have a very strong balance sheet. We have a great mine that has open pit resources to 26 with the potential to expand to 24 and to 2040 and beyond. And finally, we've got asset diversification through Clara. Thank you very much. I'm happy to take questions.